Welcome back to Ferocious Syndication. This is Zed. Today we're going to be talking about Intec Pharma, going with the ticker NTEC. We're going to go through due diligence, technical analysis, some news, and what I think about this one. So without further ado, let's jump right into this one. So Intec Pharma is a clinical stage biopharmaceutical company focused on developing drugs based on the proprietary Accordion Pill platform technology, and the company's Accordion Pill is an oral drug delivery system that is designed to improve the efficacy and safety of existing drugs and drugs in development by utilizing an efficient retention and specific release mechanism. Now we have some latest news here. So the first one happened on July 26, 2021 at AM Eastern Standard Time, and they announced a $30 million private placements ahead of the Decoy merger. So this one here, the private placement to be preceded by reverse split and domestication merger. So Intec Israel is to effect 1-for-4 reverse split shares by market close on July 26, 2021. Domestication merger to enter into effect prior to market open on July 27, 2021. So both of those already happened. Holders of Intec Israel ordinary shares will become holders of Intec US shares of common stock. At the market open of July 27, 2021, US will begin trading on the Nasdaq market instead of Intec Israel under the Intec Israel existing symbol NTEC. So really they went from Intec Israel to Intec US with 1-to-4 reverse split. You get to see that the impacts of that now shows that the dollar value is around 1485. Divide that by 4 to see what the previous value was. Now it's technically they're the same value because it's the number of shares multiplied by how much that value of that is, and if you decrease the number of shares, the value technically stays the same, but the price of the stock increases. Now, in terms of some of the more later on information, other than the July 26 relating towards this Decoy merger, is coming into words March 15, 2021, where they announced the merger agreement to start with. So the combined company to advance novel immunotherapy technology that primes both innate and adaptive immune response, targeting multiple tumor types and chronic viral infections investigation. The new drug application filing is expected to happen in the second half of 2021. So the combined company will advance its immune therapy platform to battle a variety of tumor types and chronic viral infections. Decoy previously had an IND meeting with FDA, currently plans to file an IND in the second half of 2021 and to initiate phase 1 clinical trials in 2022, targeting solid tumors and lymphomas. Decoy bacteria-based platform is a novel modality which has potential to dramatically change how we treat cancer and chronic viral diseases, said Dr. Roger Pomerantz, who is expected to become the chairman of the board of directors of the combined company. This transformative transactions provides Intec with a robust clinical pipeline based on a novel immunotherapy platform and gives Intec entree into exciting areas of immunology. Now, this was said by the CEO, and our transition into immunology leverages Intec's senior level expertise and offers an exciting potential value creating opportunity for our shareholders. Now, they do have a presentation back from March 2021, and the main thing I do want to take a look at is Decoy investment thesis, which basically says that immunology based anti-tumor and antiviral platform with IND filing anticipated in the second half of 2021, with preclinical data demonstrates Decoy safely primes innate and adaptive immune pathways with technology active against multiple solid tumors and lymphoma models as single agents in combo with checkpoint therapy, targeted antibodies, or chemotherapy, and sustained durable responses, immunological memory, and wide therapeutic index. The platform with activity against chronic hepatitis B virus HBV and HIV in animal models in large opportunities in an unmet medical needs in multiple therapeutics areas and broad issued patent portfolio. So we get to see some more information relating towards all this, decoy innovation, relating towards their hypothesis as well, and they've been established ever since the 1990s. They also have bacteria in vivos and some more technical information, but in all that sense, I don't think we need to go over it because, of course, if they're not going to show here if it doesn't show positive results. So you can fairly assume that all these are positive and these are cool things, but this is the thing you need to look at. So the clinical development plan. So the first thing here is the IND filing is happening in the second half of 2021 into quarter 3 to quarter 4, which is the current time we're in right now. Around quarter 1 to 2 2022, so the first half of 2022, you're anticipating to have the first clinical trials. Then you have expansions to 2 tumors going on to quarter 3 to 4 by 2023, and you have the phase 1B combination happening in mid 2024. As you get to see, basically pipelines for biopharmaceuticals tend to expand over years, and that in result takes in a lot of money that would be needed to be raised to sustain this kind of spending because they are pre-profit phase. So for this, we're going to take a look into how much cash Intec has before even talking about the money additional raised. So this is talking about the money raised all the way for $30 million. And this one here is talking about a law case or a lawsuit that is happening where the Mystic Merger Sub Limited is actually put as a defendant. And the plaintiff here, or I'm just going to read it here, Intec Parent, Inc., Dillion Merger Subsidiary, Inc., Decoy Biosystems, Inc., Decoy, and the Mystic Merger Sublimited are both as defendants in this case. And this case is actions Saint or ST Hillary versus Intec Pharmaceutical Limited. And basically for this one here, I'm just going to read the plaintiff. In the actions alleged, among other things, that the members of Intec board breached their fiduciary duties by agreeing to previously disclosed merger of the companies with Decoy and misrepresented and failed to disclose the proxy statement prospectus, which forms part of the registration statement on the SR or S4 filing filed by the company on April 20th, 2021, and the alleged material information necessary for shareholders or company to cast informed vote to merger. A lot of these law cases and lawsuits happen, and basically here the plaintiff subsequently voluntarily dismissed the action as per previous actions that the company did. And in addition, in order to avoid uncertainties in the costs associated with the contested application, the plaintiff's attorney fee and expenses without any admission that the plaintiff's claim were basically false or any other such fees or expense would be owed on July 13, 2021. So mainly, as you get to see, the company basically is going to pay them around $225,000 as just to cover the fees. And literally, this is why these companies do it. These lawyers do it. They're just trying to milk any cash they can with any stock drop. Anyway, you get to see that the votes for the merger were approved and the reverse split were approved previously, so they didn't do anything wrong in that sense. And in the total assets currently, they're sitting at $17.4 million. In addition to that $30 million they're going to be raising very soon. And in terms of the restricted cash and unrestricted cash, that's a combination of around $11 million. And in terms of the current expenses, this might not be accurate because of the merger, but the current net losses is around $4.2 million. As you get to see, it might not be a clear path from here to 2023 without raising more money, and that's why you see the raising, for instance, for a $30 million private placement, as it is very critical for the company's success. Keep in mind that before even raising those shares, the market cap is currently around $44 million, and you are almost diluting the company by, I would say, 100% with that 30 million placement. So just keep that in mind. Now, in terms of institutional buyers, but before doing so, if you would like to see more contents like this, make sure to click the subscribe button and leave notifications on. Also, don't forget to drop a like to this video. And if you'd like to join our Discord, totally free, in the description below. We're not trying to upsell you on anything on there. In terms of institutional buyers, you don't get to see much activity in July, with exception with these two, even though Herald Insurance is reporting only 11 shares. I hope that's actually more of a mistake. Otherwise, the commission alone on that 11 shares doesn't make it worth it. But in terms of insiders, things are very quiet, and hopefully we can get to see more action on the technical analysis. Now, in the technical analysis aspects, what we actually really get to see here is multiple things I do want to highlight first off. So, on the 1-day perspective, the MACD is curving upwards, which is very bullish onto this one. You're going to probably anticipate a lot of action happening from Friday and Monday, and it looks like Monday or Tuesday might actually be a good day to anticipate this reversal, or at least next week. Now, on the William Percent R, which is very similar to the relative strength index, you're seeing that this one is sitting at neutral. So it's not overbought or oversold. So it's a good thing that it's not overbought with this much green volume coming in, meaning that it still has some room to grow. As you get to see that this one basically dropped down to around $8 and $9 and jumped back to where it was before. So that's necessarily not a bad thing. In terms of the general price action and movements and volumes, you get to see that the volumes are very bullish. Now, first off, we can go back towards, I would say, around this phase here. And what I do really want to do here is quickly going on with a Fibonacci retracement. I'm using TradingView, by the way. It's not my usual platform, but the usual platform is IQ Edge, and I find that TradingView still does the job. So this is your Fibonacci retracements, and the reason why I'm highlighting this one is because high-frequency traders use it. So you get to see that there's a current resistance sitting at the 1478, above there 1950, above there 2281, 2612, 3022, and 3684. Now, supports are a little bit rougher to get to, but first off, let's try to find all the support levels here. So currently, it's battling on a support level of around 1336. Below there, you get to see my dotted line, 1265, and a very critical one at 1203. Below there, 1099. Below there, 1028, going down to 982, and down to 907 and 894. The resistance parts are a few as well. Currently, the most important resistance to break is the 1436. Above there, you're looking around 1545. Above there, 1716, going up to 1812, and then 1987, followed by a little bit higher up to 2345, going upwards to around 2621 and around 2796, going up to around 3192 and almost to the $40 level, actually 3642. And comes to the question to Ed, what do you think about this one? Well, my own opinion towards this one, this is getting a lot of hype, a lot of attention. Be very careful because for the longer term, it still is a biopharmaceutical. That means it will need a lot more money to burn through in order to potentially effective. And the biggest issue is that they will run through out of money at some point, and they will have to raise money through the stock market because they really can't go to a bank and ask for continuous amounts of loans to pay for all that stuff. There's a lot of pharmaceuticals there. This one here is not even phase 3, it's phase 1 again, as I said. So it is really a tough bet to get to. So be very careful because it is in a tough spot. People are putting in money into this one and hopefully not their entire basket. It's more of a riskier play, but you get to see that there's this massive support level at the 1357 that a lot of people are betting on that it jumps back up. And it has a lot of history of keeping on jumping out back up and up and up and up, all the way into basically a 2-3 days gap up or a massive bounce. And I think that's what a lot of people are counting on. But if you're doing that, it's trading, not investing, or at least it's swing trading or not investing. So be very careful onto that because the rug can easily get pulled down. Now, hopefully this one does go ahead with their clinical trials and be successful. I do wish that for almost every pharmaceutical that is bringing benefit to human mankind. So without further ado, make sure to drop it down in the comments below what you think about this one, subscribe, notifications on, and have a wonderful day. Now, if you're still here on this video, make sure to drop down below and join our Discord. We have a lot of different things going on, including, for instance, members that gives picks for free. It's not pump and dumps, we just things we think about, swings, etc. We also have really exciting bots. You can actually use those ones. For instance, we're just testing out this bot, for instance, that gives you Fibonacci resistance points, activities, etc. And we have a bunch of free things, totally free. We run on tips here, and you can ask me questions, suggest stocks, etc. It's a really nice community that has been growing up very fast at a very good rate, and it's totally free. If you would like to join that one, feel free to do so in the description below, and have a wonderful day.